Welcome back. It's the tail end of the results season, so we've got a lot of stocks that will be on our watch. You can't really call them top 10, but for what it is worth, we will start with the top stocks that Anuj is going to watch.
Yeah, so I'll watch out for two mid-cap stocks, largish mid-caps. First is Canpin Homes. That's been a remarkable stock. It's just, it's come on my list so many times. It's even at these levels showing remarkable strength, and there was massive delivery buying yesterday. It's among the strongest NBFC stocks, and it's surged after the F&O exclusion. So the pressure of shorts not there, and valuation-wise also one of the not so expensive ones. And the other is United Spirits. I think it's just one of those stocks which people buy only on breakouts. So yesterday there was a fresh breakout, fresh expansion. It will surprise a lot of people. It's still not reclaimed the 2015 highs. So it's a 5-year range that we're talking about. Can it break it this time? I think that's something we'll watch out for, but a fresh breakout was visible yesterday.
If it will not be Thursday, it will be Friday. Yeah, it normally moves on that. And I take your point on Canpin Homes. It's actually one of the best run NBFCs. Yeah. I remember the CEO saying that, I said, can you compete with HDFC? He said, we don't. There is an India large enough which is outside HDFC as well. Okay, I just want to draw your attention to the finance companies. The CPI inflation coming in at 7.6%. is going to push bond prices lower, and that will mean a sentiment negative for banks, mostly PSU banks because they have more government bonds, and NBFCs. So watch out for them. It's going to be sentiment negative, but of course liquidity can ensure that the dips are bought. And the second set is the IIP numbers, very bad capex numbers. Capital goods was minus 18%. So already, we have seen Siemens, ABB, all numbers so bad that this may just add and keep that set of stocks also lower. But I think to counter all this, I think will be IT. First, Kritika filed this piece from what NASSCOM said in its report yesterday.
If you look at the NASSCOM CEO survey that has come in now, that essentially talks about the outlook for FY20, and that's something that we need to watch for. 57% of the CEOs that were polled, there were about 100 CEOs that were polled, believe that the industry business performance will be similar to somewhat better in 2020. 53% CEOs expect a similar to stronger economy in FY21. 72% CEOs expect clients to demonstrate similar to better growth. 60% CEOs expect technology spend to grow in developed markets in similar range as 2019. And the top 3 drivers of growth will include cloud, data, AI, ML, and cybersecurity. The key risks include macroeconomic factors, global economic uncertainties, lack of digital capabilities, and skills. So upskilling is going to be a critical way for NASSCOM and the IT sector to be able to drive back that growth rate. But at this point in time, the industry, keeping in mind the global economic conditions, says that this growth rate is actually, and I'm quoting them, phenomenal.
Okay,
phenomenal.
Yes. And IT has done well, of course. It's been in all seasons sort of sector. But Yes Bank, that saga never ends. Now, they delayed the results, but also made an interesting point about one more possibility of fundraising. Abhishek?
Well, Anuj, as you mentioned, they have given out fresh names once again. So they have extended the Q3 FY20 results to be out by, 14th March 2020 as they are working on fundraising programs. They have received non-binding expression of interest from various investors. Now, some of the names that they have put out in the release include JC Flowers LLC, Tilden Park Capital, Management, the Oak Hill Advisors UK LLP, Silver Point Capital, etc. So they are in discussion with various investors with respect to the commercial terms, pricing, size, the method of fundraising, etc., which will take time. Back to you.
Okay, thanks a lot for that. And I think this will be taken positively. Anshu Jain's skills as an investment banker should stand in good stead. I consider this news extremely positive. So green for Yes Bank.
If JC Flowers is indeed the name, because that's been in the past credited with turnaround of banks, but we need to see the final confirmation.
Yeah,
of that.
That is because there can be many a slip between the cup and the lip, and this is a difficult bank because initially you have to take about a 50,000 crore hit, but there is green pastures beyond that, and these people are coming from economies where interest rates are negative. A bank simply cannot make money. So this could be a very attractive proposition.
Also, it's in F&O bands, so that's also something.
Okay,
you
the
should
stock will
remember.
help. All
Yes.
right.
But Sonal, Ashok Leyland's numbers, we had very muted expectations, but they failed to meet even that.
Oh, absolutely, Anuj. It's weaker than the muted expectations that the street had. In terms of revenues, fell 36% at 4,000 crores. The poll was at around 4,100 crores. Margin was a bigger miss. The expectation of was around a 6% margin. The margins have come in at 5.6%. And if you go by the bar graph, it is a multi-quarter low margins. That is because of higher costs and higher discounts. The net profit also came in at 27 crores versus an expectation of 66 crores on a YOY basis. Morgan Stanley says that despite tough environment, the company has been able to maintain some cost discipline, and Credit Suisse says that margin miss has driven a weak quarter. The staff costs have gone down, but they expect it to normalize in coming quarters. But overall, the numbers were very weak, and I expect the stock to be in the red.
Thanks a lot for that. Actually, power companies have done well. Tata Power also did well. Anisha, now it is Torrent Power.
Oh, well, yes, it's good set of numbers coming in from Torrent Power. The good news was that one of the PPs at Unison plant got finalized, and that is why the numbers look better. Yes, the revenue is showing a dip of around 5%, but the margins are better. That is because the purchase cost of electricity was lower for them. And separately, the profit is also showing a big jump. Of course, there was a tax credit of around 105 crores, but even if you strip that off, the numbers are rather positive. Other than that, if you look at the internals, the T&D losses have declined, the PLFs are higher. So my expectation is it is going to be a green tick on this one.
Okay, thanks for that. IRCTC is the other green one, isn't it, Mangalam?
Pick of the result season, Lata, this time around, an express train sort of result, because the resumption of fees for the internet ticking was the key reason for strong numbers. The street knew that, which is why the stock has moved 5 times since it listed in October itself, listed at 2x the price band of 320 itself. So just to run you through the numbers, 65% jump in the company's revenue, EBITDA jumped by over 180%, net profit also jumped by around 170 odd percent. The ticket business that I was talking about, the company started charging people for booking tickets on the IRCTC website. There we have seen a 300% jump in the revenue, 400% jump in the EBIT, and margins have jumped from 65% to 85%. And in case you need water to digest those numbers, may that be Rail Neer, because there also we saw a 40% jump in the revenue and EBIT owing to increased capacity.
Okay, and of course it helps that it's a monopoly, so you can only buy a Rail Neer when you're traveling on railways. But Anisha, what about other results?
Past the gloom if you had any hopes of an economic recovery, because the stocks that I have on my radar all reported very, very disappointing set. So NBCC reported a decline of 21% on revenue, and look at the profit decline, 41% decline on profits, and the company has missed the expectations of the street by a big margin. Separately, if you look at Bharat Dynamics as well, the revenue is down 50%, the margins have contracted to 8% versus 26%, and the profit nosedived by 72%. So big red tick on that one as well. Schaeffler India also missed expectations. The revenue is down 13%. Margins are steady, but the net profit declined 21% year on year. Sterling and Wilson, that stock has been caught in a lot of controversy, and the numbers are also nothing to write home about. The revenues declined by 35%. The PBT declined by 73%, despite the fact that the other income jumped up by 25%. Sadbhav Infrastructure also reported a rather weak set. The revenue declined all the way to 500 crores versus over 900 crores last year, and the losses have expanded to 117 crores versus 28 crore loss. Welspun Enterprises also disappointed. There's a decent growth on the top line, but because of the losses from other joint ventures, the PAT has come down to 26 crores versus 43 crores last year. The only shade of green that I have is because Mangalam told me to report one good set of numbers, and that is Titagarh Wagons. The revenue is up around 52%, and the profit has gone up to 13 crores versus 6 crores. Otherwise, a disappointing list.
You saved your skin by including Titagarh Wagons. I was just going to say, bus, just take Anisha off. Sonal, have you some green to report?
Oh yes, I absolutely do. PI Industries, good set of numbers. The revenue growth is at around 20%. The margins have also increased by around 100 basis points, and it is driven by the domestic revenue growth, that is around 24%. Exports have also grown recently at 19%. But I have another red, that is Aarti Industries, because the specialty chemicals and the pharma revenue growth has been very disappointing at 2%. EBITDA is flat at 254 crores. Overall, the revenues have gone down by 4%, and profits are just up 2%. And considering the stock stock move, these numbers are very disappointing. Finolex Industries, the revenues have declined by 7%, volumes have declined by 11% versus peers like Astral was showing some volume growth. So that's why it was disappointing. However, margins were higher because of lower costs, and profits were also up because of lower taxes and higher other income. Lastly, Sunteck Realty, some good operational update out there because pre-sales are up 220% on a sequential basis, up 5% on a YOY basis, and collections are also up 8% on a YOY basis. So expect that stock to do well in trade today.
Okay, that's a lot of stocks to watch out for, and of course, fag end of earnings season, so there are some more numbers to watch out for, Ekta.
Well, yes, and it's all red on my list today, so disappointing. Dish TV expected to probably be in the red. Revenue down 42% on a year-on-year basis. Net loss higher than Edelweiss's estimates of around 3.6 crores. It's come in at around 66.7 crores. Future Life also consolidated revenue just about subdued, higher by around 3% and consolidated net profit down around 8.3% year-on-year. Natco, disappointing set of numbers. Revenue down 13%, margins 26.7% versus estimates of 39%. And a profit decline of 34%. And Satin Credit Care provisions have spiked up on a Q-on-Q basis, 61 crores versus 16 crores, and a profit which is down 34% year-on-year.
Okay, thanks for that. Sonal, a couple of more stocks which are in news but not results.
Oh yes, let me start with PNC Infra because that company has been declared as the lowest bidder for an NHAI project, for four-laning project, and the bid project cost is around 2,050 crore rupees, so that stock will be in focus. Another infra stock, that is KNR Constructions, because the wholly owned subsidiary of the company has received the appointed date, that is 12th Feb, for Karnataka State Highways Improvement Project, and the project cost is around 1,144 crore rupees. The project period, construction period is 2 years and concession period is 9 years, so that stock will be in focus as well.
Okay, actually that's good to hear, you know, that both these are infrastructure companies and even a couple of the other things that Sonal spoke about, Sunteck Realty, Titagarh wagons here, which Anisha pointed out, here and there is some infrastructure that is turning the corner. So I'll take those green shoots with both hands. But for the moment, we're going to take a break. Anand Tandon joins us next to see whether the green shoots are worth relying on.